All right, so we've got this report you shared, April 2024 GBD, what impact would declining asset prices and inflation? And right off the bat, what really grabbed me, it's not just another economic forecast. It starts with this conversation the author had with, get this, three Swiss bankers in Singapore.
Yeah, and it's not what you'd expect, right? I mean, we're talking Singapore, Swiss bankers, you'd think old school finance. But the thing is, these guys, they were all about crypto, super enthusiastic.
Totally. And the author even says he was surprised, right? Because on the one hand, they're into crypto, but then they're kind of down on traditional banks.
Yeah, well, they pointed to all the regulations, the costs, the whole environment banks have to deal with these days. They actually said they preferred cyber and crypto banks,
Hmm.
which, I mean, that's pretty striking coming from, Swiss bankers.
It is. And it makes you wonder, like, is this a generational thing? I mean, are we seeing a fundamental shift in how people view, well, what even is a bank these days?
That's a huge point. And it really gets to the heart of what this report's exploring, how different generations think about investing. You've got, say, baby boomers who might think gold, cash under the mattress, that's safe. But then you've got younger folks, and for them, it's digital wallets, crypto. That's their safe haven.
Right, right. And remember, what, a few years back, all those Gen Z investors piling into, like, cannabis stocks, the meme stocks, the whole SPAC craze,
Yeah.
huge run-ups, and then boom, they deflated fast.
Exactly. So you see this momentum-based investing, and the report makes this crucial point about the speed of information now. With online trading, any news, it hits the market instantly, and you get these huge swings up or down much faster than, even 10 years ago.
So what this deep dive is really all about is what happens if that momentum, all that exuberance, what if it reverses?
Hmm.
Especially, we had these historically low interest rates, asset prices going up, up, up. What happens if that changes?
Yeah, I mean, that's the big question. What are the consequences, not just for investors, but for the whole economy? That's what we're going to try and unpack here, right? Give you a clear picture of all these moving parts.
Okay, so let's start with this whole generational divide and how people approach wealth and investing. Those Swiss bankers is like a perfect example.
Well, think about it. For a lot of younger investors, the traditional path to wealth, stocks, bonds, real estate, it seems out of reach. I mean, the report even cites this statistic. Homebuyers today need to earn almost 80% more than they did just back in 2020 to afford a house. So that's crazy.
It is. So when you see like crypto going up thousands of percent, yeah, maybe it's risky, but it also feels like the only way to get ahead.
Right. And then you layer on top of that this massive wealth transfer that's happening, trillions of dollars moving from, the older generations to millennials, Gen Z. So the question is, where is all that money going to go? Will they stick with these, let's call them higher risk assets?
All right, now let's shift gears a bit, talk about inflation, because the report gets into some like big picture economic ideas here, bringing in folks like Henry Hazlitt, Paul Volcker.
Yeah, and Hazlitt, he was really against inflation, saw it as this destructive force, even linking it to, like, the growth of government and his whole thing about paper money versus gold. It's a classic debate. But that quote of his, stand a little less between me and the sun, it gets at this idea of, like, less government interference in the economy.
And then Volcker, he's the guy who actually like tamed inflation back in the 80s, and he was all about price stability, right? Saying if you let inflation get out of control, it's really hard to get it back.
So what's interesting is the report's author, he's a bit skeptical, right? The Fed says, okay, median family net worth went up from 2019 to 2022. But then he points out prices, they got up like 25% in that same time. So are people really better off?
Especially, younger folks who might not even own a house yet or have a lot of assets.
Right. And this gets to this idea of a silent depression. Like, on paper, the economy might look okay, but people's actual standard of living could be going down.
And then, you add in the whole asset bubble thing. The report talks about this wealth effect, where basically when your assets go up, you feel richer, so you spend more. But what happens when those asset prices come down?
Yeah, and they don't even have to crash, right? Even if they just flatten out, that can have a huge impact on spending, on the whole economy. And the report highlights some early warning signs, like delinquencies going up on, apartment loans, credit cards, auto loans.
And if we look historically, right, there's this pattern. You get these huge asset bubbles. People get caught up in it. Like back in the 70s in London, it was gold and silver.
Mhm.
In Hong Kong in the 80s, it was property, stocks. And now you could argue it's crypto.
And the point is, people get so focused on these speculative assets that they kind of forget about, their actual jobs, the real economy. And you see this even now. of more people retiring early. Maybe they think they've made enough. But what if those gains were, kind of artificial?
So now you've got the Fed, and they're in this tough spot. They need to fight inflation, but if they raise rates too much, well, that could cause problems in other areas, like all those buy now, pay later loans or commercial real estate.
Right. It's like a balancing act. And, the author of this report, he's pretty hardcore. He thinks the Fed might have to hike rates way up, maybe to 7.5%, even if that causes a recession. He's that worried about inflation.
Yeah, and then on top of that, you've got the whole fiscal side, the government spending way more than it takes in. Like at Zero Hedge is always talking about this, how unsustainable it is.
So yeah, lots of potential problems. But the report also talks about, okay, if this is the environment we're in, where are the opportunities? And it starts with this quote from John W. Gardner about striving for excellence. And the author kind of connects that to Boeing, how they've had all these issues lately. Like maybe it's a sign that things in the U.S. economy, they peaked back in like 2018, 2019.
Interesting. So what does that mean for investors? Well, the author's basically saying be careful with all those high-flying sectors, tech, semiconductors, AI. He thinks there might be more value in areas that have been kind of neglected, like gold miners, energy, Hong Kong property, even Latin American stocks.
So it's a contrarian view for sure, but he does point to some positive signs. Financial stocks have been doing well, copper prices, that's usually a good indicator of economic activity, and those are up. So it's not all doom and gloom.
Right. And then there's this whole gold versus crypto thing. Now, crypto's obviously been getting all the attention, but the author points out that, flows into gold ETFs, they haven't been that huge.
Yeah.
So maybe the recent rise in gold prices, it's not just speculation.
Maybe there's something more fundamental going on. And he also highlights that gold miners, their valuations are pretty low compared to the price of gold itself. So that could be an opportunity.
Okay, and then just to throw out a couple of specific ideas, the report mentions park hotels and resorts. They've actually outperformed, get this, the Magnificent Seven tech stocks. And he's still bullish on Hong Kong property, pointing to the recovery in the hotel sector there.
And for anyone looking at emerging markets, he specifically mentions Latin America and this firm called Trufflehound Capital. He even gives the contact info for Stephen R. Bauer, the guy who runs it.
So, yeah, definitely some unconventional thinking there. But that's kind of the point, right? Maybe the best opportunities are in the places people aren't looking.
Okay, so as we wrap up this deep dive, I think the big takeaway is things are complicated. There are all these different factors at play, generational shifts, inflation, asset bubbles, government policies. It's all connected.
And it's easy to get caught up in the hype, right? Whatever's hot at the moment.
Mhm.
But what this report really pushes you to do is think for yourself. Look beyond the headlines. Consider different perspectives.
And ultimately, the question is, what's going to work best for your portfolio, your goals, your risk tolerance? This report gives you some ideas, some things to consider, but the real work, that's up to you.
Exactly. All right. That's it for this deep dive. Thanks for joining us.
Thanks for listening.